Thank you so much for joining us on the Sales versus Marketing podcast. I'm your host, Scott Clary, and today I am super excited to be sitting down with Howard Lindzon, a fellow Canadian. He is a Canadian author, a financial analyst, technical analyst, and a super angel investor. So Lindzon manages a hedge fund. He's a managing partner of Social Leverage. He's a limited partner at Knightsbridge Capital Partners, co-founder of StockTwits, and has a tenured history in both investing at early seed stages, also managing, running, and exiting his own companies, and just being a general knowledge powerhouse for both financial and early stage venture-backed businesses, technology. He's done quite a bit in his career, and I'm really excited to speak with him. So Howard, if you can, give us a little bit of a 360 of your origin story, where you've come from, and we can go into that a little bit, and then we'll speak about what you're doing now.
Thanks for that intro. I was born in Toronto, school there, went to Western, probably partied a little too hard, ended up back in the day at Windsor, which, was kind of like prison for Torontonians. And but had a great year there, ended up doing well, spending a lot of time in Michigan at basketball games, Fab Five era, and always wanted to move to Arizona, where I am today, with a 10-year stint in San Diego.
So out of that background, you came from Western. What were you doing coming out of university? Was there anything that looked like what you're doing now? What was your actual background in that you wanted to go into coming out of school?
Yeah, I think the biggest thing back then was, I grew up in a wealthy, semi-wealthy, I guess. Depends. It seemed wealthy. Jewish community, Forest Hill, and all my friends were lawyers, doctors. Back then, pre-internet, and Toronto wasn't like an entrepreneur. I don't think entrepreneur was like a cool thing. So you were supposed to be a professional, lawyer, doctor, accountant. And I just ran away from that, or sabotaged it, or whatever I did to, in a way, not be those three things. And my first job was in 1987, coming out of Western with not great grades and not want to go to law school or whatever, just working at a small brokerage in Yorkville. No training. And I was working in the back office, so taking orders. And back then there was no real computer system, so it was all by hand. So it's pretty interesting. And then a few months into my job, the stock market crashed and I was basically out of work. So so that was my brief stint, and that's what made me have to go back to school. There was no real mentorship, because you had to be a professional. So you had to just keep going to school or just get a job, and I didn't really have a network. So I think, back then it just took a lot longer for people to kind of accelerate themselves forward. Hence, we call our firm Social Leverage. We live in this era today, 30 years later, where, my 20-year-old nieces and nephews are so networked and have so much more knowledge. We keep making fun of this younger generation, but oh my God, they're 10 times ahead of where I was at 20.
Well, the access, like you said, the access to information, the ability to have any choice in what you do at any time is just at the, you sign on to a computer and you can educate yourself for free now. You can go to, podcasts, Audibles, YouTube, and learn quite a bit about literally any job you'd ever want to do. If it doesn't require a professional designation to actually do it, it's very easy to ramp up. So back when you're speaking about you had a stint in a brokerage and back office, went back to school. What actually prompted you after school to, what did you do after school? What was your thing after university?
School was more school, right? I was just kind of, no one was pushing me. And I had pretty charm life. So went to Arizona State for my MBA and a school called Thunderbird for a master's in international management. Now my whole goal was to live in the States. So I had to get sponsored, for a green card.
Yeah.
And I ended up becoming a stockbroker again. Well, no, this time I'm actually a stockbroker. And back in 1991, so I became a stockbroker and I was cold calling. And that was pre-internet, and you'd pick up the phone and try and get through to rich people and have to go through their secretaries. And it was a pretty miserable existence. But I love the stock market. So luckily for me, I just kind of got the bug.
Yeah.
And, for the next 10, 15 years, and even through today, I continue to make mistakes. But I mean, the stock market, getting exposure, good or bad, to that career has kind of became my passion.
And just getting a bug for something, you're obviously you've, I guess, proven out your success at this point in your life. But how did you become successful in, you started off cold calling, I'm assuming you eventually moved to higher level positions, more responsibility, managing larger clients. What sort of propelled you forward? Was it mentorship, or was it just drive, passion that you wanted to learn more? Because you didn't come from any formal background. You said you didn't have a network that really supported this at the beginning. So what sort
Yeah,
of
I
pushed
mean,
you
I
in
was
that?
getting my green card. I was, the guy who hired me for my first real job as a broker, trained me, was a really smart guy, and he was like from Minnesota, moving to Arizona, and Pat Ryle, and the thing that he taught me was just follow to be successful in the brokerage business, find companies, stick with them that, have great earnings. And that meant nothing to a 20-year-old, 25, 6-year-old.
Yeah.
So we were just trying to survive and get commissions. So the whole business was screwed up, still is. But he always gave me good advice. It was like, he would talk about Medtronic back in the early 90s, and probably should have just held on to that stock. So he was from Minnesota, where a lot of great companies were headquartered. But I mean, the real thing for me was, it was just a stepping stone, right? When you're calling all
Yeah.
day and looking at the newspaper to find out who rich people are so that you could try and be their broker. In the end, it was inevitable. I found a company that I ended up, going to invest in and work for. So I really left the business after a couple of years to go work at a startup called The Grip, which kind of became the pet rock of the ad specialty business. So kind of my first angel investment / career move just before the internet started was as un-internet a company as possible. It was a latex. It was a stress ball company called The Grip, and we sold millions and millions of units on QVC. QVC was the internet before the internet, except the internet of QVC was just thousands of people answering phones with goofball products on TV. So I kind of stumbled into that through a cold call and my own instincts with a very small amount of money. And The Grip became kind of a legendary product of the early 90s.
And that was like your kickoff into startup culture, entrepreneurism.
Yeah, it was the worst thing
Yeah.
that could happen. I was extremely successful with
Yeah.
my first company. It was kind of like, and we made every mistake. I don't think I made every mistake, but it wasn't my company. It was just, I was kind of the COO, even though I was yet, because I was the MBA in the room. It was a
Yeah.
local entrepreneur named Mark Scatterday, who I'm still friends with, and we're now he was in his 20s, now we're all in our 50s, but he had just invented this product, and we stumbled and bumbled and got the QVC account, and we just, from there made every mistake because we thought we were so smart. But the key takeaway from that very first business, and applies to why software is eating the world today, is that we had incredible margins. So when you have incredible margins, you can make incredible amount of mistakes. And at The Grip, even though we were, not an internet software company, we were a manufacturing company. We would make this product for 20 cents or 30 cents and sell it for $2, $3, $4 at even wholesale. And so we were making money before we ship the product, and that can
Yeah.
lead to all kinds of that doesn't happen in real life very often. So it was a huge success despite our own ineptness. And you know, the lesson is when you have high gross margins, you can make a lot of mistakes.
So I really like
Gross margins matter. I mean, gross margins matter.
yeah. Well, no, of course, if you're 80, 90+% margin, even if you ship a few widgets, you're still doing quite well. So after that, then you've been massively successful at QVC, or at the Grip rather. Is that when you sort of started investing in other ventures? You started a hedge fund, and you were looking at like sort of spreading your wealth and looking to invest in that kind of thing. Is that roughly when you started doing that?
Yeah, I mean, we argued all the time about what to do with the proceeds. You know, I kind of now had money to be in the markets, and it was the boom in the 90s, healthcare boom and NASDAQ boom, semiconductor boom, and the internet boom. I mean, it was the first mania, and it was pre-mania. The internet hadn't even started. It was just software and technology and the beginnings of the internet and healthcare. It was just crazy. The 90s were crazy. And at least for making money. And you know, the ultimate business was starting a hedge fund. Now I had money. Mark at the Grip had money, and I just went out and raised, I think, about 10 million, and said, I'm just going to trade for a living with other people's money, and started a hedge fund.
But that's so the second you start, so a hedge fund, you were not actually investing in other companies yet. That wasn't.
No, it's just public
Yeah.
markets. You know, it's
Gotcha.
just like that was the cool thing in the 90s. Was to, even though I had no experience in the markets really, it was just like, people trust me, I'll go, like what a venture capital fund is today.
Yeah.
Because the markets were, you know, you had mutual funds, and you could compete against mutual funds because they had high fees themselves.
And how do you consciously take 10 million of other people's money when you're not sure what you're doing, and first of all have the nerves to do that, and then also still be successful? Because there's a lot of onus on you, a lot of responsibility placed on your shoulders.
Yeah, I don't know if I was successful. I did it for 18 years.
That's successful enough.
Well, I mean, I think the lesson of that is I never loved it, other than
Yeah.
the setting up of the business thing. Competing against everybody in the world for returns is a ludicrous thing. And hence Vanguard exists, which says, let's, you know, and the same thing will happen one day. We can talk about it at the very end. It's going to happen to venture capital one day, is it'll just get automated.
Mm-hmm.
But, you know, there'll always be some alpha, and we swing between, but you know, I got into the hedge fund business at probably the tail end of when it was cool to be a hedge fund, and survived. But by 2005, Vanguard, it was clear to me that indexing, clear to me at least as a trend follower, that you're batting your head against the wall as the mutual funds are going away and index funds were starting, and it's like, you can't charge the same fees, yada yada yada. But how did I raise 10 million? It's, you know, you have trust. People trusted me. They thought I was smart. I wasn't going to steal anybody's money. So, you know, as long as, you know, that's how it starts. And to get bigger, you have to have returns. I think people forget that. You know, it's everybody. You know, in a bull market, it's rather easy to raise money, and in, you know, 98, I forget the crisis in Japan, or the long-term debt. There's so many crises over the 30 years or so that I've been investing, but that's when it really comes down to who knows what they're doing. And I didn't, but I survived, and survived relatively better than everybody else, and that's kind of how it goes.
But it was still not like your passion, you would say, when you're doing
No, it was, you know, it really was. And then you have a family and kids, so you're not going to just, you kind of get stuck. And again, without mentorship, I was just kind of surviving. And then in 2005, I started, you know, getting into the idea of, you know, because the markets were getting harder, I got into the idea of investing in startups again. And into my office walked the team from Golf Now, actually the father of the team from Golf Now. and I was a golfer and a passionate golfer, and Golf Now was a Phoenix company, and they pitched me Golf Now, and I invested right away, and that became a big company. I invested in LifeLock right after, which was a local Phoenix company. Now it was a multi-billion-dollar exit. So I kind of got lucky in a way. Two great companies were local Phoenix companies, and I saw them early and had the instinct to invest. And slowly, I just became more interested again in doing private investing versus the public markets, which lucky me, was a good timing to go into the private market and venture capital. Back then, startups were valued at under $1 million. So it was a good time to be doing software media investing. So a lot of it is timing, and then mentorship, right? At that time, 2005, Twitter hadn't started, but the blogging, everybody was blogging, and guys, then some of the best venture capitalists in the world, I didn't know who they were at the time, but they were showing up in search results as I searched for Term Machine and other things. And luckily for me, they were the best in the world at what they do, and that was the initial kind of aha moment around internet. So the aha moment for the internet came for me in like 2005 with blogging and blog rolls and just how people were connected, how smart people were connected, and then how much free information these smartest experts in their industries were giving away.
Because that sort of speaks to some of the projects you took on, like Wall Strip that you sold to CBS.
There were so many.
Yeah,
we're not appreciative, but the big bang moments of YouTube, Twitter, Facebook, LinkedIn, all happening kind of at the same time as access. Everybody kind of been on ramp through AOL and suffered through the first iteration of the web and Yahoo, and now we have Google search, YouTube, soon to follow. Well, obviously the BlackBerry at the time, and then soon to follow the smartphone. I mean, you're talking about. And we're only still 13 years after that. So, and I was already 40 when the internet became a thing, a real thing, post-bubble. So it's just like...
Yeah, but you rode the wave well, more than...
Well, it would be hard not to ride the wave. Again, I think that you have to... Yeah, I mean, I got it, and I was a little bit lucky, and I positioned myself. But it would be really hard as a 40-year-old with an open mind not to have gotten rich with that kind of big bang moment. Now, I mean, obviously I've had a great run on top of it, but it's been an incredible opportunity that just happened. I wish it happened when I was 30, but it didn't, and I was 40 and I just kind of dropped everything and went all in on the internet.
One thing I want to go back to, I want to speak briefly about StockTwits and you being so bullish on Twitter and that piece of you, but and I'll go back to some of the other companies that you've invested in your portfolio. But what I wanted to sort of highlight here is the fact that you brought up a really good point. None of this really happened until, of course you were successful before, relatively successful, but compared to where you're at now, none of this happened until much later in your life. And you mentioned that, your niece is 20, I think you said, and she has access to all this information. And everybody has access to all this information, which is good, and it enables you to be successful much earlier. But I also think that everybody is very impatient. And I think that could be to your detriment as well.
You could be the old angry Simpsons guy waving your hat saying that, but you can't blame my son who's 20 for being impatient. I mean, everything works. People say, well, they're socialists. Well, they are socialists, not because they think everybody should have money, but they have an iPhone. Every person should have that ability to at least have a smartphone in this day and age. And once everybody has a smartphone, that's why wealth is going up, and that's why maybe wars eventually are not as important. Obviously, technology around wars, with drones and everything. But once people get a taste of making a living, they just lose the interest in fighting, right? Which is why this era, it's so dangerous right now. It's just, people are fighting over what seems like crazy, stupid things in America. But going back to my son, when you have this abundance, of course people are going to be more spoiled. But they're spoiled in much a way that, like, leave me alone. I don't need things. I don't need Porsches and clothes. Give me my. I'll shop at Lulu every quarter for the few basic things I need. I'll go on trips. I don't need to buy a second and first and fourth home. So it's just different, and
Yeah.
that's a great thing. And same with media, right? We started with YouTube videos and cat videos, and now there's endless podcasts. You could listen to podcasts, forever, and never get through a fraction of what's out there. So again, this mentorship, I wrote about it today, just being a mentor. It's like, all you can do is kind of pay it forward. And with my kids and with my nieces and nephews, yeah, they're kind of spoiled, but they're just, you can't blame them when they grew up with all this abundance of product and knowledge and entertainment, and Uber and Netflix, Snapchat, and now the AirPods. I think that'll be the next revolution. It's truly one of the greatest products of all time. So we just when you think it can't be topped, it gets topped, because
Yeah.
audio is the new screen.
Do you think that having all that access, though, because there's nothing wrong, like you mentioned, you don't want to be the old man waving the hat, angry at all the kids. That's not the vibe that you really want to you really want to have. But do you think that it hurts their career expectations or their financial expectations from when they have access to all this information? Do you understand what I'm saying?
Yeah, but it's the natural order of things. The corporations have got too much power, and they deserve to die. So the fact that we hate the corporations, they're wrecking America at many levels, right? They're buying politics, and the only way that so maybe it's a good thing the kids want to hop jobs every 3 years and say fuck you to the corporations, because those corporations, it's all about getting the talent, and if you don't have the talent, you die. And
so it raises the bar.
well, I'm saying it's its own way of destruction. It seems like just when it seems like social network are intolerable, TikTok comes along, and kids don't care about the same things they cared about just a year ago, right? They're just leaning back and laughing and sharing videos and creating videos, and they don't care how many followers they have, and it doesn't really mean anything. Versus, Facebook became all about your parents and yelling about politics. So just when it looked over, TikTok comes along, and then just when when it looked like Apple was rolling over, they came up with the AirPods. So you got to constantly be on the lookout for what's coming around the corner. And I think you can't blame kids seeing this amount of creative destruction over the last 10 years, that they're not going to be loyal to much. So again, it is what it is. You have to kind of take a step back. It's helped having kids go through this and watch them. This is all so new, but it's also kind of interesting to watch them.
No, that's it's a good perspective. I want to speak about StockTwits, and I want to understand why, out of all the social media networks, it seems like you're very bullish on Twitter, and obviously I think that sort of led to your company. Why was that, out of everything?
Well, I'm not bullish on Twitter anymore. I think it's the best product other than the AirPods. Twitter's probably the best product. Now, kids today would say TikTok and Snapchat, and I won't argue with them there. But I'm the last guy to leave a bar at this point on Twitter, but because my investment is in that network. My personal network, is based on WordPress, luckily. So I own my own domain, which every person should do as soon as they get it, or every parent should buy their kid their own domain.com, so they can control their own, persona.
Yeah.
Donald Trump does it, but maybe he owns DonaldTrump.com because he can afford it. He doesn't need it, but it sure sure would help any kid today to make sure they own the search of their own name, right? And you can't own the search of your own name unless you own the .com.
Yeah.
And it's a big mistake if you believe in the internet. The kid, so my kids own their own domains. They may own their own Facebook profile, but what's that worth? That's only worth as much as Facebook will charge people to look at it. Twitter. So that's my network that I, kind of built my brand, that in WordPress. So I think when I saw Twitter, I was like, oh my God, this is stupid. It took me like 50 times before calling it stupid, 50 times before I had an aha moment and said, well, this is going to be great for financial information. One day the president will be tweeting about the stock market. That's what I kind of wrote in 2007 when I had my aha moment. And then I went all in on, there's going to be another Bloomberg and it'll be free and it'll be, all these smart people on Twitter talking about stocks and markets and, set me down this path of StockTwits and all my investing in Robinhood and eToro and kind of what I'm doing today. I had this big vision that, CNBC would be on YouTube. So I started Wall Strip and we sold that to CBS. I had this big vision that Twitter would be the next Bloomberg. So I started StockTwits. And I had this big vision that, there'd be another E-Trade, and that turned out to be eToro and Robinhood, which I was a seed investor in. So kind of just everything that I experienced as a 20-year-old in the stock market and, the internet boom, I just kind of projected onto the social boom and kind of got it right.
So is that when you look at your portfolio companies now, I think if you look on your website, there's over 125. So there's much more than just like the ones that are focused on financial markets. So was that sort of the path you took? You started with something in financial markets, the eToro, the Robinhood, obviously your own company, and then you sort of branched out from there?
Yeah, I mean, the first one, obviously the Grip, which, was pre-internet, but it was consumer. I'm really fascinated by consumer products. So like today, Manscaped is like my favorite company ever. And it has nothing to do with tech other than it is a website and is, a great marketing company. And I think that's more the future, is like tech kind of bleeds into the background, like your AirPods. And now you got to come up with creative marketing and not just the product anymore. You got to be able to market it. In an era where Facebook ads and Google ads are expensive, meaning they figured out how to charge you to pay for the customer. Now you have to go back to the basic, blocking and tackling of building a real business. But I digress. Meaning, the golf. I love golf. I believed, I'd seen some of the internet 1.0 companies build huge companies around inventory management. And Golf Now walked into my room and they were helping golf courses do better yield management. So the best businesses in the world are logistics and yield management, period, end of story. If you look, because the scale and the margins and, it's endless scale and endless margins if you can match buyers and sellers, whether it's NASDAQ or CME or eBay, you know what I mean? The best businesses. So Golf Now just happened to be all that for golf. But there's just not that many opportunities to do that. And I generally need lots of capital, and I don't have lots of capital. But Golf Now was a perfect, idea at the right time. LifeLock was more about a pure marketing company. Obviously they had a product, and I sold identity theft insurance. So it was like kind of a perfect marketing company with a great, Todd Davis, a great CEO and a great simple business idea. And it was in my backyard and I did it. They're not fintech companies per se, but once I started dabbling myself as an entrepreneur, I was definitely going to be in fintech. And that's where I came up with Wall Strip, which was basically, let's just build, CNBC, which I hated. Let's just put that on YouTube and see what happens. And 6 months later, CBS acquired us. And then with StockTwits and Twitter, same thing. And with eToro and Robinhood, same thing. And today, the future for me is more about, I built up all this trust. So let's go attack the wealth management industry, which is, my next probably 10 years, 20 years.
And when because you're seed stage, so you're not investing in companies. Yeah. So what are you looking for? Like that's still a risk on your part. So are you founder centric? Like what are you looking for when you invest?
Yeah, I'd say it's founder centric. I don't think I'm smart enough. I don't have the tech skills to be platform or geek centric. I'm founder centric. Domain experience. A lot of it is serendipitous, but I have my own. People find me through my blog and through. No one's going to pitch me a biotech deal because if they do, they'd be dumb. What added value am I? I mean, people do, but I don't. I don't have. It makes it easy not to respond. So by putting myself out there, I'm curating. It's like dating. It's no different than
Yeah.
would be before the internet when you're dating. If you put on cologne and you go to a bar, you're going to attract something.
Yeah.
So by writing every day and telling people what interests me, then other people with those same interests to me pitch me things.
And that's generally how you found like the companies you're working with now.
Well, that's my edge, right? I'm not
Yeah.
constantly having to be on a plane, showing up at these events, looking for the hot, sweaty new company and paying market prices. I'm telling people what I'm looking for and showing people what I'm an expert in, and then the other experts in the field look to me. So it's kind of like you fake it till you make it because you're passionate about a subject, and then all of a
Hmm.
sudden, after 20 years, you're an expert.
Hmm. One thing that I really liked that sort of stood out for me, it's a tagline on your website, investing for profit and joy. So I know a lot of people invest for profit. What does that mean to you? Or
Well,
what
I
should
mean,
you
it
take away?
means, and with StockTwits too, is like there's no quick way. Like I just went through 20 years of how I became an expert overnight.
Yeah.
There's no quick way to do it. I think with StockTwits, Twitter, well, whatever it is that the apps that we're using, you can maybe increase. Certain industries you can become a success overnight. Truly, I mean that's it's unfair, but it happens. It's just not normal. But there's no such thing as an overnight success. But these products speed everything up. So that's the fun part. If I was 30 and depressed, what a horrible waste of time that would be, sadly, right? But because this is the greatest time, luckily, in America to be alive, no matter almost what your zip code is. But you have to kind of find mentors, be a mentor, and really stick to your passion, right?
Hmm.
And it's happening earlier and earlier for kids, which is great. I kind of wandered in the desert until I was 40, and so you know the so for me it's founder and their domain experience and trying to trick them and convince them that it's being a founder is not that fun. Like most of the time I'm trying to talk people out of their business, and that's
Yeah.
because I know with StockTwits, it's been a grind. 12 years with Wall Strip, it was a miracle. StockTwits is a better idea than Wall Strip, and you make more money off Wall Strip than they do. So there's no predicting this. So with founders, I'm trying to explain to them the good, the bad, the ugly. Everybody's so excited, they got their idea, and they're so passionate, and they understand the hole in the market that they got to penetrate. But I'm generally probing and saying, "Are you sure you want to do this for 12 years? Look where I am." And so you're trying to see if these people are really up for 10 to 12 years.
Yeah. Because if not, I
That's
think,
what it takes. That's what it
yeah.
takes. Even if your company is great, Robinhood's 7 years already. Sounds like an overnight success, but for the founders, it's probably a grind at this point. No, they're wealthy, but I'm saying, eToro's 10 years. It's rarely that at 3 years you're going to be successful.
And I don't think the amount of energy invested or the amount of energy required, excuse me, is really apparent to people that are first time founders or CEOs. I think they have it, like you said, they have an idea and they have no idea how many hours invested, how much energy it'll take, the stress that it will probably cause, regardless of whether or not it's successful. Um, so I think that as you do a lot of these deals, I think that that's probably the best way to approach it. Just because if not, you're going to regardless of whether or not the company's successful, you really want people to align with you who are happy that they've aligned with you. Like you want that value to come from both sides, right? So
They
you want,
have to align. And so the difference of investing today as a seed versus past is before, like 10 years ago, I didn't necessarily need to meet the CEO, right? It was just such a Cambrian explosion moment of, and this is what where people are going to make massive mistakes right now is, forgetting Uber, because that was 2009, 2010, but 2005, 6, 7, 8, no matter what you touched, if they were connected to YouTube, LinkedIn, Twitter, Facebook, you were going to get rich, because the arbitrage of getting a customer versus the value of a customer was just so in line with being a founder or an investor. Today, everybody's smarter and prices are more, elevated, and the markets are more efficient for all this social and media and messaging. That's much harder. But so I caught this Cambrian wave where you could write a 25K check, hearing a pitch over an email, and make money. I don't think people are going to be as lucky today. So, luckily for us, we're a bigger fund. We don't write checks on the whim. We spend a lot of time. They say if you have a great idea, get drunk and see if that idea is as good tomorrow. And I think the same thing with investing in startups. You got to spend a lot of time with the founders before you write the check. And we're just upfront now. We're like, we're not writing 100K drunken checks. It's like, here's how we work. Here's what we do. We move pretty fast relative to the other nitwits in our industry or geniuses. And so we're very upfront about how we do things in our process. But, we're all for quick no's and quick yeses, but they're within reason.
I want to pivot a little bit because a lot of people that listen to this podcast are in a career. So the venture capital, or the seed funding bit, I think it definitely is interesting. I love speaking to people who have invested. But what I do want to talk about is one of the points on your website. Everyone should be an investor, and I think that's very very applicable to people that are within organizations that are looking to set themselves up for their future and to be comfortable. Even if they don't want to start a business, they still need to dabble to some extent in financial markets, and obviously some of the portfolio companies that you've invested in and that you've worked with sort of help them do that. But why should everyone be an investor?
Because they can, because every parent, it's now every parent's duty to do that. So it's not every kid should be an investor. It's shame on parents, because the schools aren't going to do it. It's shame on parents for not this. The on-ramp is everywhere, whether it's Robinhood or Stash or Wealthfront, or everybody can have an account, at least when they're 18. Every parent should open an account for a kid that's 12 to 15 and buy them one share. You can buy a share for nothing, for no commission. So everybody can put $50 now on Amazon, or $20 on Nike, or $5 on Lulu, whatever your favorite companies are, and see how the markets work. So that's what I mean about everybody should be an investor. The fact that everybody's praising Warren Buffett, who's 90, great, he earned it. But we should be talking about the next 20-year-old. We should be we should be celebrating the new investors. And that means, more distribution, more opportunities. And so with the stuff that we've been investing in for 10 years, our vision was there was going to be hundreds of millions of more people that have access to investing. It'd be very hard to lose money with that thesis, in hindsight today, which luckily we think we're still at the beginning. The world's changing, but we're still at the beginning. Now that these hundreds of millions of people have access to investing, what's next? And that'll probably just be more investing and education and media. But now that everybody can invest, that's why I said they should invest. Because, everybody should feel that ownership and be able to vote and say how they feel about companies. You can vote every day by just not owning. You hate Marlboro, or Philip Morris, you don't have to own the stock, or Exxon. But if you love Nike, you should be able to vote with your money and put $5 a month on that, and see how the markets work and how compounding works. It's really quite easy. So that's
I agree with you. I 100% agree with you. The reason why I bring this up is because the tools are there, but the education isn't. So how
the education is? I mean, Twitter's free, and there's tons of people on StockTwits.
Yeah, that's what I'm getting at. So where should people be looking? Because obviously traditional education is not to the caliber, right? That you would want it to be.
Well, they don't even have to look, right? Like they can open up Robinhood app and put $20 in and buy a share for $20 of their favorite stock. So they don't need a mentor to do that. That's just, you know, the power of compounding is what people need to know is,
Hmm.
putting, interest rates, and the farther you are away from retirement, the more aggressive you should be. But if you compound, $10 at 8% a year over 50 years, I don't have the math in my head. It's a massive amount of, once you do that basic math, you have to be nuts not to put dollars every month into the market. And that's why Acorns was such a popular app, right? It just tricks you
Yeah.
into saving money in the market. Before the internet, it was like, oh, well, pay yourself first. No one pays themselves first. Everybody's living month to month, and everybody can barely afford to live. But Acorns is kind of like a hack, a trick to
Yeah.
take $5. My son's on Acorns and he can't afford it, but every week it's sneaking $5 out of his account, and it rounds up all his spending, puts it into an ETF. So between Acorns and Robinhood and StockTwits and Twitter, you can find mentorship. Just follow me on StockTwits or ask me a question.
Yeah, no, that's good, and I do like that a lot of the companies that you work with do enable this because I always think about employees in organizations where pensions are really not a thing compared to what they were like 50 years ago, right? Like now, it's sort of it's the onus is on the employee to really set themselves up, and I don't think enough people are sort of learning about Acorn, Robinhood, anything really. Um, I think that more people should be sort of learning about how to set yourself up to be financially comfortable. And I think a lot of that comes from investing, obviously, compounding. Uh, but I think it's like, I think there's not enough push in that direction. In my opinion, I don't think there's enough push in that direction because I think that the education's out there, but I guess I don't know, the gateway drug into investing it rests on the parents, right? And they didn't
I
live
think it
through
rests
that.
on the parents. They should be saving for their kids. Keep it
Yeah.
simple. I'm not a tax person, but I'm like, make it simple. Show your kids, include them in the decisions. They know which products they love, and explain to them those things. You don't have to make it mathematical. It's just objects and brands, right? Like, what products do you use every day? Well, if you're using them every day, it makes sense that other people are, and put a few bucks behind that. I mean, I
Yeah.
keep it as simple as possible. Yeah, I call it 8 to 80 brands, right? Like if an 8-year-old uses the product and 80-year-olds use the product, and you're not invested in that company, you're kind of insane.
That's a good.
So
I like the
Netflix,
rule. Yeah.
Uber, not that you should just buy the stocks today and they're gonna go up forever. You have to monitor them, and sometimes it's better to buy them when they're in down 30%, of course. But if it's an 8 to 80 brand, you should be hoping they drop 50%. As long as 8-year-olds and 80-year-olds continue to use it, and basically now, like with Google, it's infants to death, right?
Yeah.
Very hard to bet against a company that has people locked in as their infants, and also on their deathbeds. So, going beyond that strategy, you don't really need to do that, right? If you find companies and products that that every age group is using, then just stick with that.
I want to when I'm closing this out, I want to pull out some higher level life lessons out of you. But before I go into that,
I
uh,
only I only have a couple minutes. I apologize, but I got that.
no, that's fine. We're gonna close it up. Is there anything else that you wanted to bring up in terms of what you're doing now that we didn't cover?
Yeah, I mean, what I'm doing now is just more of the same. Just, I don't want to like write bigger checks. We want to continue to write, uh, leading checks into great founders in the financial services and enterprise space and consumer products. Um, but it's easy to find me on howardlindzon.com. I'm pretty friendly. If you come on StockTwits and ask questions about investing, I'll do it. Same, just add Howard Lindzon. And then on Twitter, I don't talk about stocks that much, but more about venture capital and goofing off. But I would give this, if to be mentored, you can't, the social, I would say social matters, right? Social graces. Back in the day when I was cold calling, I hated it because people weren't expecting my call and it was intrusive. So if you're inspired by somebody, don't ask them, hey, I've got the next Google. Like, you have to
Yeah.
kind of do this foreplay thing. Kids don't understand foreplay because they have Tinder and they're just getting right to it on the
Yeah.
first text. But it's not their fault. That's just life. But kids are going to have to learn this foreplay thing where you can't just ask and expect people that have put 20 years in to tell you their life secrets. You have to kind of eavesdrop and say thank you, and you kind of got to learn to wait for the right moment. Yeah, I mean, you can ask for whatever you want, maybe you'll get it, but generally you have to kind of pay your dues a little bit. Luckily, you can do it, in an elegant way by just being nice.
You actually, you inadvertently nailed my last question. I just wanted to ask, like, the advice you give your younger self, and it sounds like that was.
I was pretty good, right? Like back then I had to do a job just to survive. Today, kids shouldn't have to do that. Maybe they do, but like there's so many tools and so many things they can do in their spare times and gigs they can take. But people need to just be a little patient and put in the work. Try and just do their 10,000 hours. Step one. And pay it forward. But a lot of it is just common sense, social common sense, in how to behave. And even though it's digital groups, you have to learn how to behave in a digital group.
Yeah, no, that's very good. So that's all I got. Is there anything else you wanted to close up with?
No, I appreciate it. Just sorry I got to hop, but I appreciate the good questions. It's fun to talk about the past.
Yeah,
and the
no,
future,
that's
right?
what I wanted to get out of it, because your background is really impressive, and I like sort of map out that story from where you started to where you're at now. But thank you very much. I appreciate it.
All right, see you, Scott.
All right, cheers. All right, cheers. Bye now. All right, thank you for joining me on another episode of the Sales versus Marketing podcast. Thank you so much, Howard, for the chat. That was a really good session. I hope that everybody got a little bit out of that. Howard's a really impressive individual, just what he's been able to accomplish throughout his career, and what he's doing now as well with his portfolio companies and his investments. I would suggest you go consume some of his content. He writes a lot about business, life, investing, startups, finance. He's a very well-spoken individual. So go check out his content. As always, if you haven't already, please like, subscribe, and share this podcast with all your friends, family, peers, coworkers. If you haven't already, you can subscribe to this podcast wherever podcasts are found, including Spotify, iTunes, Acast, Google, Overcast. That's literally on any podcast outlet. So go check it out. And as always, have a great week, have a productive week, and we will speak again soon. Bye now.